Hi, I'm John Stewart, Chief Investment Officer of Farmers Trust Company. This is the Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.
Hi, I'm John Stewart. Welcome to this week's edition of the Investor's Edge. First up, the week in review. Jobs are strong, but for how long? Well, the monthly employment report was released last week, and by all accounts, it looked very strong. U.S. employers added more than 400,000 jobs during the month of April, and the unemployment rate came in at 3.6%, which is just 0.1% above the pre-pandemic low of 3.5%. Now, unfortunately, the number of people looking for work decreased by 363,000. In addition, some employers, mostly in the hard-hit technology sector, actually announced more than 24,000 job cuts in April, which is 14% higher than the number of layoffs that were announced in March. Companies are actually having a hard time now keeping up with rising costs, including higher-priced labor. Average earnings have risen 5.5% in the past year, but that's been more than canceled out by the 8.5% rate of inflation, which is causing a serious margin squeeze for companies. Target announced a reduction in its estimated operating margin from 5% down to 2% as their excess inventories and higher transportation costs are starting to weigh on the retailer. Now, at some point, cutting staff might be the only option to stop the bleeding. For this week's featured insight, do stock splits benefit investors? Amazon recently completed a 20-for-1 stock split, which took the price of their shares from around $2,500 to roughly $125. Now, increasing the number of shares and lowering the price of a single share makes Amazon seem more affordable to retail investors. But other than that, the split really doesn't change much. Financial ratios like the price to earnings and price to sales for the company remain the same, as does the market value of the company overall. Splitting shares does not change the value of a company, it only changes the number of shares that make up the same total market value. For example, if you have two pies, one cut in half and one cut in 8 pieces, it doesn't change the amount of pie, only the size of each piece. Amazon may have considered splitting their stock to increase the chance that they may get added to the Dow Jones Industrial Average. Since that's an index that's price-weighted as opposed to market-weighted like the S&P 500, it avoids adding stocks with prices that are far above the average of the index's other constituents. Apple actually was added to the Dow after splitting its shares back in 2015. Now, Alphabet, parent company of Google, has also announced a 20-for-1 stock split, with their shares trading at roughly the same price as Amazon. That split will take effect next month. Looking ahead, Fed set to hike rates again. The Federal Reserve is meeting again next week, and they will announce their decision on whether or not to adjust monetary policy. Expectations are for another 0.5% increase in the Fed funds rate, to a new range of 1.25 to 1.5%. Given the persistence of higher inflation, the Fed is likely to maintain a relatively hawkish stance regarding the future path of rates, as it tries to tighten monetary conditions in an attempt to rein in price pressures throughout the economy. Now, current expectations involve more half-point rate hikes at the Fed's next 2 meetings as well. Any hint of a less aggressive path for rate increases could catalyze a stock market rally, while something more aggressive than current expectations would almost guarantee future downside for markets, at least in the near term. Once again, I'm John Stewart. Thank you for watching The Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.